Hello, fellow traders. 'Tis I, the Rumpled One. It's Wednesday, July the 10th, the year 2019. Let's talk trading. Caught sleeping. Were you caught sleeping this morning? FOMC announcement seemed like it came a couple hours early. But if you are a seasoned veteran trader, you know these things can happen. So on a news day, you're usually there a few hours before the news so you can prepare, so you can see how the market's reacting. So you can decide whether or not you want to take a position before the announcement, during the announcement, or after the announcement. But it seems like, from what I've been seeing on a few of those forums out there, a lot of people got caught sleeping. Now, if you had your risk and money management in place, even with that huge drop on the US dollar, say in dollar Canadian and dollar yen, you would have been stopped out, hopefully at or near your stop loss. You wouldn't have taken it on the chin. And once again, calculations are really simple. And I want to show you a chart here. Since we're talking about the FOMC announcement, what has to do with raising interest rates or keeping them the same or lowering interest rates, you can see here the swap. Now, yesterday, the swap on dollar Canadian, if you were long, was positive. But as you can see now, it's negative here. And like on the euro yen, it doesn't matter if you're long or short, you're going to be paying the broker's interest. So that's something to keep in mind, especially for you swing traders. As you can see, the dollar franc is paying a nice interest rate if you're long, and not so nice. It's taking a lot of money away if you are short, especially if you're trading heavy. It's something to keep in mind where if you hold on to dollar yen long enough, those little swap rate credits to your account can add up, and it can help you make just a little more money. And if you're underwater and you're holding, well, every day maybe you're gaining. So when the market swings your way, you can actually get out earlier. If you get out at your original TP, you're going to have the added bonus of collecting some of that swap. But once again, always have your money and risk management in place. And just remember, these videos are for educational purposes only, and your results may differ from mine. Therefore, remember, Forex trading is risky, and you should seek the help and advice of an accredited financial professional. All the gaps filled if you're just tuning in for the week. And you can see here we're inside the candle body of the previous week's candle over the euro yen, and about 22 pips above that lower weekly wick zone from the previous week. On looking at the buy zone, and you can see here the pivot was right near the open, so there was no bias really. No real bias at all. We still have a missed pivot from yesterday. No short signal, one long signal there early in the sessions, and another one here, a couple of pro trades. But euro yen just seems to be hovering right around the open, and as you can see, there's not much of a range, which is interesting on FOMC day. But if you take a look here, you can see only two pairs are over 100 on range. Volatility is definitely drying up here. And you can see we exited out of the previous day's high right there, about enough pips to pull in, about 19 pips if you nailed that high and got in the previous day's high. So there was a nice trade. On the Einstein line, as you can see, I just opened this particular profile not long ago. No trades triggered as of yet. In the range here, once again, only 37. We just don't have the range, it seems like. Just there's no volatility, so you need to adjust your profit taking accordingly. And price action, you see we had a 3-ball, nice short there. We've got a 2-ball looking to go long. We're right around that psychological 122.00 line. It could be a coin toss which way the market's going to move from here. And once again, just looking at the previous and current highs and lows, it tells you a lot. 1, 2, 3, 4 in a row. This would be the 5th. Wasn't much of a move to the downside here. But something else you might want to consider when you're trading, and I know not very many people do it, but if you look at the previous month, or bring up the monthly chart here, and you can start seeing levels. Once again, just looking back, seeing if price is in a lower wick zone, like here or down here or right here, and to see if possibly you can take a trade looking at those levels. And the thing about the wick zones is they are just what they are. They're nothing more than a couple of points on a graph. Now, some people talk about supply demand, which is a concept. Other people will talk about support resistance, which is a concept. But we're just talking about wick zones, which is just a matter of an area between the high and the top of the candle and the bottom and the candle on the low. But we're not calling it anything other than that because that's pretty much just what it is. We're not giving it any other what's the word? Attributes. We're just saying, well, this is the wick zone, and we know what price likes to do when it gets inside the wick zone. It likes to leave, and the rate or the frequency is somewhere around 70% or higher. Actually, I should probably bring up that one of those templates. Maybe I'll do that if I remember tomorrow, and so we can take a look at that so you can see it with your own 2 eyes. You can do your own calculations if you like, but you can just see, did price enter the wick zone? Yes or no? Did it leave it? Yes or no? And you can just keep your own little hashtag score sheet, or you can just see it in your eyes. I mean, here's a wick zone. Did price enter it? Yes. Did price leave it? Yes. Did it enter it? Yes. Did it leave it? Did it enter it? Did it leave it? It opened in it. Did it leave it? It entered. It left. So some of these things should be obvious to the trader. And you can see here the same thing is true. Price actually opened, entered it, left it. Price here came down inside it, but remained. But then the next day it left it. So you can do things like look for price opening in a previous day's wick zone, hoping to make a nice trade there. And if it does, that's usually on a Monday when it'll gap, because usually the previous session's close and the current session open are usually the same number, maybe off by a pip or a few points. Okay, now there was one trade that I did take advantage of. When I opened up the chart, I couldn't resist it. I saw dollar Canadian down here and I figured it was an overreaction. In fact, let me bring up, I think it's the 15-minute chart. I saw what price had done right here. So when it got down here, I figured this was the time to enter. And then a few minutes later, or about a half hour later, it shot up and I punched out somewhere around here. So that was a nice trade. I just figured that since the FOMC announcement was happening, a lot of times the market will overreact and you can sometimes take advantage of it. So right here, this was another nice wick zone short. So you see the market reacted and reacted the other way. And then you can see price pulled back, came down, started to go back up. But right here, it left that wick zone and the short was on. And during news announcements, it's really nice to take profit as soon as you can because price can whipsaw. But if you get the ride, just let it ride. In fact, you can come all the way down to the M1 chart. And you can see it was a really nice ride there. Not to mention, if you take one other look, you can see here, this was the previous day's low, which means it exited the wick zone here, came back in, entered, and then took off. And what I can do here is I can put two more lines on the chart for you so we can show the top and the bottom. True. And right here, you can see what happened on looking at the 1 minute chart using the daily bottom and low, which is the wick zone. Still was a nice trade right there, right through it. So that's how, or that's one way of trading the news, is using the same methods that you use every day. It's just when you trade the news, when news is out, you have to be really quick because there's that saying, there's two kinds of traders, the quick and the dead. I think they adapted that from two types of gunfighters, the quick and the dead. And then right here, the other way around, you can see we have price entering the previous day's wick zone, a little exit back in, and then another exit back in, and then another exit. So if you were sitting there at your screen and you just really wanted to hit the market, the news gave you a lot of opportunity. And let's see, we can probably pull this chart over a bit. That little triangle there for traders, where you just put your cursor on it and hold down that left mouse button, you can drag it over in case you didn't know that trick. But you can see back here, it was in the upper wick zone, price came out, news came out, and this whole move was all due to FOMC. Okay, fellow traders, I think that wraps it up for today. I hope that helped. I hope you weren't caught sleeping. And remember, the next time you trade, it's not what you trade, it's how you trade it. So go out there and drain the banks.